Hello, good morning, everyone. My name is Yanis Patre, and today I will be presenting the financial accounting analysis of Nepali music industry using the G21 Nepal. In this presentation, I will discuss the three important business transactions commonly found in the entertainment industry, including the artist advance payment, studio equipment purchase, and digital streaming royalty revenue. I will also explain the related journal entries, the impact of the accounting equation, and the importance of the financial reporting based on the IFRS standard and accounting principle. Moving towards the next slide. Uh, in this slide, so we are discussing over the company overview. G21 Nepal is one of the early professional music production and entertainment companies operating in Nepal and is based in Kathmandu. This company is involved in music production, artist management, digital distribution, and event organization. With the rise of the digital streaming platform such as Spotify, YouTube Music, and the Apple Music, G21 Nepal has adapted the changing music industry environment. The company earns revenue from streaming the royalties, live events, music distribution, and the artist-related contract. This example shows how the Nepali music industry becoming more professional and globally connected throughout the digital platform and the modern accounting practice. Moving towards the next slide, so we are discussing about the transaction one, artist advance payment. In this first transaction, G21 Nepal signs a recording contract with the artist Swapna Suman and provides an advance of 1.5 million NPR against the future royalties. Uh, the journal entry from the transaction is debiting artist advance receivable and cash crediting the creating the cash at bank. In this case, one assets increase while another asset decrease, so the accounting question remain balanced. According to the matching principle of IFRS 15, the advance payment should not be treated as the expenses immediately because the company expects future economic benefit from the artist performance royalty earnings. Therefore, the advance is recorded as the assets, and until it is recovered through the future royalties, the treatments help to maintain the accurate financial reporting and avoid the overstating expenses in the current accounting period. Moving towards the next slide, so we're talking about the transaction two, it is studio equipment purchase on credit. In second transaction, G21 Nepal purchased a professional recording equipment worth NPR 2.2 million on credit from Audio Nepal Private Limited. The journal entry includes the debiting recording equipments and creating the accounting accounts payable. This transaction increases assets because the company acquires equipments, and it also increases the liabilities because the payment will be made later. According to the IAS 16, the recording equipment is classified as a property and plant equipment as known as PPE. Instead of recording the full amount of expenses immediately, the equipment is capitalized and depreciated over its useful life. And this accounting treatment provides more accurate representation of the company's financial position and ensure the compliance with the international accounting standards. In transaction three, talking about the digital streaming royalty revenue. In third, in third transaction, G21 Nepal receives the 9 lakh from Spotify and due to the streaming royalties, which are depreciated and deposited in the company's bank's account. The journal entries includes the debiting cash at bank and the creating the royalty revenue. This transaction increased the company such as the balance and also increased the equity throughout the retained earnings generated from the revenue. Under the IFRS revenue, it should be recognized when the performance obligation has been satisfied. Since the music has already been distributed and made available for the streaming, the company recognized the royalty revenue properly. This transaction also highlights the growing importance of digital streaming income in the modern music industry as streaming platform as a streaming platform continues replacing the physical music sales. Now, in slide 6, we are talking about the accuracy. We're talking about the analysis. We're talking about analysis accuracy of the financial portrayal. This slide explains the both strengths and the weakness of accounting practice in the music industry. Some positive practice includes the recording artist advance and the assets recognize the streaming of the revenue according to the IFRS 15 and the capitalizing the studio equipments correctly under the IS 16. However, there are several common problems in the industry. Some companies immediately expenses artist advance, which inflates the cost in the current period, and in addition, the timing in the live events revenue, and recognition in the some inaccurate and the unrecouped artist advance are often not properly disclosed and the contingent liabilities. To improve the transparency and the reporting quality, companies should companies should apply IFRS 15 carefully, amortize the artist advance payment properly, and provide the clear disclosures in the financial statement. This practice helps to improve the reliability, accountability, and the investor confidence. To conclude the slide, uh, uh, mm, how financial accounting principles are applied in the Nepali music industry using the example of G21. I discussed the three major business transactions, including the artist advance payment, studio equipment purchase, and the digital streaming royalty revenue. I also connected these transactions with the important accounting concepts such as the accrual accounting, revenue recognition, and the asset capitalization. Overall, the Overall, the accurate financial reporting is essential for maintaining the transparency, improving decision making, and supporting the long-term sustainability and the growth of the entertainment companies in digital area. Here are some references that I used while completing the slides. Thank you.